As a financial planner that's designed fixed income portfolios for ultra high net worth families, I need to clear up one huge misconception when it comes to interest rates in the Federal Reserve. When the Fed cuts rates, it does not necessarily mean that your mortgage rate is going lower. Let me explain. The Federal Reserve determines the rate that is used for overnight. The market is what determines other interest rates, which have a direct influence on what your mortgage rate will be. Mortgage rates are largely driven by longer-term bonds. Most notably, the 10-year Treasury note serves as a key influencing factor on what 30-year mortgage rates are in the United States. So if the Federal Reserve doesn't control these rates, then what does? Well, the short answer, again, was the market. But more specifically, there's three main things that largely will drive what Treasury bonds price at. Number one is inflation expectations. So what is the future assumed rate of inflation for the United States? Number two, growth rate. How much are we going to grow over the next X amount of time, depending on the duration of the fixed income security that you're looking to buy? And number three is what's called term premium. Really just a fancy way of saying, are you getting a reward for holding that fixed income security longer? If you're looking for some recent history on when something like this has happened, where the Federal Reserve cut interest rates and we've seen long-term bonds go up, look no further than the fall of 2024. So we actually had the Federal Reserve cut interest rates by 0.5% or 50 basis points, and longer-term bonds actually increased in value. This is not just a US phenomenon, but it's actually happened globally in many countries. Actually, just in the last couple months, this being the late summer of 2025, the UK has actually experienced this recently as well, as they've cut interest rates several times so far this year, and their long-term debt has increased in rate. So while everybody's waiting and anticipating and hoping, quite frankly, that the Federal Reserve cuts interest rates, just know that doesn't necessarily mean that your interest rate on your debt is going to go lower, because they're two different things. One can have a little bit of control, but they're affected by much different things. For help understanding how interest rate changes will affect your investment portfolio, feel free to schedule a call with me using a link in my bio.